Welcome to the Week in Review, the show that brings you up to date on the week that was. Here are the top stories. SBI's bad loans rise. Government announces brand new telecom rules. And the yellow metals luster fades for Indian consumers. We start with the country's largest lender, State Bank of India. High demand for loans helped SBI post healthy profits for the third quarter. But bad loans have also shot up, raising concerns about the bank's performance. Profits rose 15% to 3,263 crores compared to the same period the previous year. That was on a 26.7% increase in net interest income to 11,470 crores. On the downside, non-performing loans are now at a record high of 40,098 crores compared to 23,438 in the year-ago period. That in turn means gross NPAs are now at 4.61% on loans. SBI Chairman Pradeep Chaudhary said about 1/4 of increase in NPAs was because of loans to an airline. And while he did not mention which airline, it's clear he was referring to Kingfisher, the troubled carriers whose debt got classified as an NPA during the third quarter. And speaking of Kingfisher, the airline quite unsurprisingly reported higher losses in the third quarter. Losses for the 3 months to December hit 444 crores from 254 crores in the same period last year. Sales meanwhile dropped 15% to 1,342 crores. The third quarter was a period of mounting troubles for Kingfisher. A severe cash crunch forced it to cancel flights during peak season, even as prices of jet fuel soared. But it gets worse for Kingfisher. The carrier's effective losses may be even more than those reported. Kingfisher has taken a tax credit of 213 crores, but it's unlikely to actually get that credit. After all, Kingfisher has never made a profit and is unlikely to suddenly make one. Also, the company reported a massive rise in other income to 205 crores from just 17 crores in the year-ago period. But the cause of that jump is unknown. Moving to other news, the government has indicated it will overhaul India's telecom rules and make them more market-friendly. On Wednesday, Telecom Minister Kapil Sibal unveiled new rules for licenses, spectrum and mergers. Most significantly, the new policy removes the link between spectrum and licenses. All telecom licenses will now be so-called unified licenses, and operators with licenses will have to get spectrum separately. There will also be a uniform license fee of 8%. Sibal also announced the government's intention to make mergers and acquisitions easier. He said mergers that had a market share of up to 35% would be approved through a simple process. The announcement came soon after the Supreme Court scrapped 122 telecom licenses. And staying with telecom, India's tax authorities are making yet another bid to extract a payment from the Vodafone Group. On Friday, the tax department sought a review of the Supreme Court verdict that dismissed its case against Vodafone. Authorities had demanded Vodafone pay up $2.2 billion in taxes for its purchase of Hutchinson's telecom business in India. But the government lost the case after Supreme Court said Vodafone was not liable to pay any tax. In other developments, the Prime Minister's office has stepped in to resolve the fuel crisis in India's power industry. On Wednesday, the PMO said government-run Coal India would sign fuel supply agreements with power companies. The move is meant to provide fuel for about 50,000 megawatts worth of generating capacity. Of course, the PMO's announcement comes even as Coal India is expected to miss its own targets for fuel supply. Switching to other news, there's finally a glimmer of hope for India's struggling economy. Inflation has eased to its lowest in more than 2 years. The wholesale price index rose 6.55% in January. In December, it stood at 7.47%. Finance Minister Pranab Mukherjee said he was now confident inflation would drop to around 6% by March end. But not everyone is so confident inflation will ease. Some economists have argued that the low figure is largely because of the base effect, since inflation stood at 9.46% last January. Others point out seasonal factors have cut down food inflation in December and January, bringing down overall inflation as well. And here are some stories in brief. State-run Indian Oil Corporation is considering a hike in petrol prices if crude oil continues to remain around $115 a barrel. Growth in petrol consumption so far this fiscal is just 5.2% compared to the usual 10%. India's IT industry is expected to go through a slowdown in the next fiscal. Industry body NASSCOM says the IT and BPO industries will add only 200,000 jobs in 2012-13. That's compared to the 230,000 expected in the current fiscal. Europe's debt crisis is being cited as the main reason. And finally, the great Indian demand for gold seems to have waned. A report from the World Gold Council says demand fell some 42% in the October to December quarter. It says the main culprits were volatile prices and a weak rupee. The fall in demand came despite the festive and wedding seasons. And that's all we have for you. Thanks for watching.